Hello, what's up, everyone? Welcome to Huobi Live Market Chat. I'm Johnny. I'm your host today. Hello, everyone. Yeah, it's just me today. Vance and Dave's not here. Never mind. I'm going to, have some interesting topics to discuss with you guys. So make sure if you have any questions, just comment down below. And since I'm the only one doing the live today, I will be, have more interaction with you guys. So if you have questions, just comment down below. I'm watching the comment section, and I'm trying to, later on I'll try to answer some of your questions if you have any. So today, we are going to talk about four to five things. First of all, we have a market update. And then next thing, I will cover an update of reverse repo because I'm seeing a spike recently, and I'm also worried about the liquidity problem, and also the RRP will affect Bitcoin's prices in the next few weeks. So I'm also going to talk about another model that I will illustrate to you guys the tips. That one actually in the last episode I already talked about it, and then I'll also discover some thoughts with you guys, like DeFi future development, and also some thoughts on CBDC. CBDC actually is central bank digital currency, and yeah, I'm just sharing my thoughts with you guys later on. So without further ado, let's get started. Actually, first thing, let's look at market today. Bitcoin's now trading at 19K and Ethereum at 1.3K. That's not bad because, some people said that, let me just switch to trading field for real quick. At least we still held a support here. That's an important area of support around this area for Bitcoin. And if we still hold here, I would think that we are still in an accumulation phase, right? And as for Ethereum, it's now in a trading range. So if you look at a small time frame, for example, like 30 minutes, we'll see how the trading range is being set up. Probably going through some consolidation here. Yeah. Some people would think that it's actually, phrase A of Wyckoff, and also we are in phrase B or phrase C. I mean, Wyckoff accumulation, but who knows, right? Let's see if if a potential spring will develop around here, and then let's see if price if it breaks the support, and then it comes back up very quickly with strong demand, and then we tend to see it bounces back to the upper boundary real quick for another test. So, yeah, markets bloody last 2 days, but we are in a consolidation status right now. So, yeah, the total market cap of Bitcoin is now 365 billion, and then for ETH it's like 160 billion. Not bad, right? And then let's look at RRP, right? Because the main dish for today is RRP. And also, I'll explain some concepts about the interest rate, Fed fund rate, and also the interest rate on reserve balances later on, in case you guys don't understand what these are. So let me just explain RRP. First of all, if we look at RRP, I just zoom into a small time frame because it's better to look at a small time frame. And then we're seeing a high here, right? 2,359 billions of dollars. So historical high, right? Because when RRP increases, we tend to see Bitcoin's price decreases. So it's a converse relationship, right? Because I think I explained in the previous episodes how RRP is related to Bitcoin, and I also made a model, just RRP model, yeah. And I took a 5 days SMA, and then we have this correlation very nicely. Invert RRP 1 over total amount of RRP, and then we see that it's actually leading because it illustrates that money is being extracted from market and vice versa. So when inverted RRP increases, Okay, because it's inverted, therefore money is being injected into the market, right? But when inverted RP decreases, money is being removed or temporarily withdrawn from the market, right? So let's for some of you guys who did not watch my previous episodes, I'm going to explain what RRP is. Just a very quick concept for you guys to understand. So reverse repo is actually an instrument used by the Federal Reserve to temporarily withdraw liquidity from the market. So basically, it's an agreement which the Fed and also its counterparty could be money market funds or some institutions, and then the Fed agrees to sell the RRP to these counterparties and then promises to buy back later on. So if we see an increase in RP, that means that Fed is selling a lot of RP to these money market funds and also other financial institutions, and the Fed is actually receiving a lot of money from these guys. So you might wonder why these institutions and also money market funds would like to purchase RP. It's because it's issued by the Federal Reserve, right? So therefore, it's basically risk-free because the Federal Reserve will also have the capability to buy back the securities later on for the agreement. The Fed will always have sufficient liquidity to do that. And therefore, these money market funds, these buyers, okay, these institutions will also like to earn interest when they buy reverse repurchase agreements, right? It's actually an investment. You can think of like something like that, securities. So the interest rate paid by Fed to these buyers is actually based on the overnight reverse repurchase agreement award weight. So this is actually the weight that the Fed is willing to pay these buyers. Okay. So it's easy to understand that. Let's think about it in this way. So when the award weight is very high, for example, it's now standing at 3.05%, and then it will be attractive for these buyers because it's risk-free. Actually, the Fed will just have the ability to pay back the interest with the principal later on. The Fed will have the credibility to do that, and therefore is deemed as the safe haven for these huge capitals to do investments. So when RRP is low, we can think like this period is the period of quantitative easing, right? QE. So the Fed wanted to stimulate the economy, more financial activities. The Fed wanted more liquidity in the market. Therefore, the rate will be maintained very low because if it pushed the rate higher and higher, and then it would just attract more money, right? So vice versa, we think inversely, when the rate is low, and then these buyers would not deem it as an attractive investment, and therefore pushing the rate high will have an effect of temporarily removing liquidity, or I would say removing or temporarily withdrawing liquidity from the market, from the market, and you know what will be affected firstly, and that will be risky assets and also equities. So we have a conclusion that the reverse repurchase agreement actually has a inverse correlation with equity market, especially Bitcoin, because we find a strong correlation of inverted reverse repo with Bitcoin for the last half year to 1 year time frame. Okay. So another thing that I would also like to introduce to you, or I'd like you to have a look, is the interest rate on reserve balance, RRB. So we are seeing that the interest rate on reserve balance is actually increasing, right? Because it's now standing at 3.15%, and the RRP and also the interest rate on reserve balances actually they are the constitution. They are the components of the interest rate that the Fed is always saying or referring to. RRP actually sets the boundary. the RRB interest rate on reserve balances, and also RRP sets award rate sets the boundaries for an upper limit and also lower limit of the interest rate, and therefore they work together to the Fed use these two instruments to affect interest rate in the market, and that's how it works. Yeah. So let me just get it real quick. So actually, you can look up this data on FRED if you just search it on Google, and you will have this website. And then you can search RRB or reverse repo award rate. And then what you can do with it is actually an interactive chart. So you can use the edit graph, that one, and then actually you can, wait a minute, you can do some addition here. So you can add line here. So you can search RRB and see if you can add it here. Yeah, you can add that to the data series, and then you have line 2 here. And then after you have the line 2, and then you click to the format, that one, and then you will select that the scale of this interest rate on reserve balance. Actually, we will take the same scale because they are actually very similar to each other. The scale is very similar. We can take this on the same y-axis. So we are seeing that. Just a minute. Let me zoom in real quickly. Okay. Okay. Just a minute. So you can see that there is a gap between the RRB and also the reverse repo, and that actually it's the interest rate boundaries. Okay. Yeah. So together they move the interest rate up, right? So when the interest rate on reserve balance is high, and then central banks will tend to just deposit their money with Federal Reserve. So less financial activities out there. Therefore, why they need to increase the interest rate on reserve balances if they want to increase the interest, if they want to raise the interest rate. So basically, they are very effective in tackling inflation because they together will reduce financial activities and also have just reduce some stimulation to the economy, and therefore hopefully together they will just tackle the rising inflation, and yeah. So let's get back to just some definition of RRB, and I already explained to you guys. Yeah, together the RRB rate and the overnight reverse repo award rate set a floor under overnight rates beneath which banks and non-bank financial institutions should be unwilling to invest funds in private markets. Private markets, we can just think of some equity markets and also Bitcoin or other investment markets. Because, as I mentioned, RRB and also reverse repo is actually an alternative of risk-free investment. And therefore, these institutions or non-institutions would like to deposit their funds with the Fed rather than, investing in private markets. So, yeah. So Bitcoin right now is, I would say, if the reverse repo keeps increasing, let's get back to the chart here. Yeah, if it keeps increasing, breaking high, and then we'll probably see Bitcoin's price going down, right? And if it goes down, and then we can assume that more liquidity is being injected in the market, and therefore Bitcoin's price could soar. That's basically how they work. So make sure you have this in your checklist so you can check the liquidity condition by yourself later on. So another model that I'm currently I think it's really interesting because TIPS this index is actually tracking very close to Ethereum's SPX S&P and also Nasdaq. And here we are seeing TIPS is breaking low, and therefore I'm expecting these equity markets, SPX and also Nasdaq and also Ethereum will also face a selling pressure sometime later, because we see that TIP actually has a leading correlation since 2022, the first January of 2022. Yeah, this correlation might be temporary, but at least we are seeing, it actually, tips is just leading for, maybe 2 weeks to 3 weeks time. And then, yeah, probably also, just put it into your checklist is, just an interesting correlation here. But, sometimes correlation can be, can change and it might work later. But if we respect the historical patterns, and then I'm assuming that the probability that it will plays out is, is high, and therefore it should be respected. But it's no surprise that if it doesn't respect this trend, and then it's all right. Yeah. So another thing that I want to discuss with you guys today is, the DXY thing. Let me just check the comment section to see if you guys have some questions down there. All right. Yeah, cool. The other thing that I want to talk about is the increasing strength of the dollars, right? Because we are seeing that if we look at DXY, it keeps shooting higher, right? If you look at DXY here, just ripping high, and that's why, it is causing a lot of, volatility to the market. If we look at a 1 week chart, actually we haven't had this high level of DXY for, historical high. So for those of you who don't know what DXY is, just let me break it down to you. Just a minute. Yeah. So let me check. Let me just, I want to show you the definition from Investopedia. So just a general concept of what DXY is. The DXY is actually a measurement of the US dollar, the strength of US dollar. So actually calculated by taking valuation of the value of some other 6 foreign currencies. The euro, Swiss franc, Japanese yen, Canadian dollar, British pound, and also Swedish krona. So these 6 currencies are used to, in the calculation of the US dollar index. So the USDX actually is mostly affected by the strength of euro, which makes up of 55.6% of the basket. And also, which follows is the Japanese yen, also the GBP, the pound, and also the Canadian dollar. And later on, we have Swiss franc in the end, also Swedish krona in the second end of the, of the calculation. So this DXY, in short, is a evaluation of the strength of the US dollar. So when US dollar shoots high, we can think that money will be attracted into holding US dollar, and somehow US DXY is actually inversely correlated to equity market, especially gold, which is treated as a historical, I would say, a store of value and also an inflation hedge instrument. And when DXY is high, investors tend to park their money in USD. Maybe they can use the US dollar to buy bonds issued by the US government, and that's treated as a very safe investment. And why the DXY shot up so high? There are a few reasons. First of all, the interest rate differs from other central banks, right? Other currencies. So, for example, the Fed has been raising interest rate very aggressively and proactively for the last half year, and then other central banks, for example, central banks in Euro, central banks in the UK, central banks in Japanese, they are not catching up with the interest rates, and therefore their currencies are relatively weak when compared to the US dollar. And therefore, a lot of investors, including global investors, they will prefer holding dollars instead of other currencies because they have more interest rate if they put their money in banks, or they can use it to buy the US bonds. And therefore, there have been a very massive demand for dollar, and therefore we are seeing DXY ripping higher and also yen, euro, pound weakening. So a lot of volatility in the FX markets these days. And another thing that that comes to my mind is that the U.S. economy seems to have a less risky condition when you compare it to other countries. For example, in the euro, a lot of countries are dealing with energy crisis, as inflation is very serious, especially energy prices, gas, oil, kind of stuff, electricity, um, just historically very expensive. Probably Germany, they're very expensive. Weaken the confidence of investors they hold in, making investments in these countries, especially in the Eurozone. And also China facing imploding housing market, and also the zero COVID policy is definitely having a I would say a bad or adverse effect on its economy, because less financial activities. If under the zero cost COVID policy, we have a lot of lockdowns, and therefore the productivity is definitely going to slow down, and therefore affecting the economy. Also less financial activities, right? And therefore all these reasons contribute to the rising demand for the USD, and therefore we have the DXY shooting very high these days. That's a point. And then another point is that is it a bad thing? So well, if you are if you are living in Eurozone, or if you are living in other countries that you don't use USD, you might see a devaluation of your asset, because your asset is being denominated in the US dollar, right? It's not denominated in the US dollar, but other currency instead. For example, Japanese yen, and also if you're holding euro, and then it seems relatively weak when you compare it to the US dollar. So we can just look at trading view, and then we can go through a list of FX market, and then we can see that for example, if we just look at euro versus USD, there have been a lot of just a lot of discussion going on, because the euro is finally reaching at I mean the euro versus US dollar is finally catching up the US dollar. The US dollar is finally catching up euro, and their conversion rate is even less than 1-to-1. So now euro is definitely weaker than US dollar, right? If you have 1 euro, then you can exchange it for 0.958, around that. Depends on what dealers you are using. There has to be some spread, but the price is around $0.958 for 1 euro. So before you have 1.2 USD per 1 euro, that's a massive decrease. We can measure it in here, it's like 22.7% massive decrease, devaluation of your assets. So if you are holding a lot of euro, and then your valuation of your cash asset in euro is having a discount of 22%. Yeah, and that's how serious it is. And then also if we look at USD JPY, oh god, yeah. So it's actually we can see for every 1 US dollar, we can now exchange it for 144 yen. So before at the low December, it's January or December, yeah, December 2020. From here, that's a total of 40% increase, right? So more than 40% decrease in Japanese yens, and therefore it's definitely not a good thing for those who are having a lot of cash in yen. And therefore if we see this, what would you do? You would just just swap your other currencies into US dollar, right? Because you see US dollar strength is very very high, and then you don't want to see your assets keep devaluating, and that's not what you want to do with your asset, right? So therefore you prefer holding US dollar, and maybe you can use the US dollar to buy US bonds from the government. Yeah, and therefore that's why we have a very huge demand in US dollar, and therefore DXY is pumping higher. Yeah, so what's the effects of having a very strong US dollar to other countries. Yeah, it might be good for US residents and also US businessmen, but for some countries or some businesses which rely on importing from the US for whatever imports, and then especially for some imports being settled by the US dollar, and that's definitely not an edge. That's a disadvantage because, for example, if I run a business in euro and then I will use US dollar to settle the oil purchasement, the gas purchasement, and definitely that's not a good thing if we want to use USD. I want to use euro because USD is very expensive in comparison to euro, and therefore it's definitely a hard time and difficult time for these businesses, and therefore having a very high DXY index, or we can say a very strong US dollar, would definitely just affect a lot of global institutions who make money with USD. Right? So right now, other central banks are actually rushing to raise their interest rates. And for example, ECB, European Central Bank, actually pumps rate aggressively and finally catching up with the Fed. And it's the first time they pumped 75 basis points. And a combined central banks from UK, Norway, Switzerland, an list of 350 basis points together, and that's a very massive, right? But it's just an addition. It's not 350 basis point for one currency. No, it's not like that. It just illustrates how central banks are rushing to raise interest rates of their currencies. So there are some downsides for stronger dollar. I just mentioned a few, and then it's actually bad for U.S. exports because less business will see if U.S. dollar is very expensive, and then they'll purchase less. Right? It's very rational and also reasonable. And then the more expensive the export, and then the less export we'll see, and yeah, very reasonable. And then it will damage export depending companies, and will also damage earnings of these companies who make money or make business overseas and report earnings in USD, because if they report their earnings in USD, and then they are definitely going to have a less valued reported earnings, right? Because of their local currencies being devalued. And then stocks will also be impacted as the valuation of companies becomes smaller. So if you think that it's likely that the Fed will going to slow down the growth of the DXY, maybe cut rates or have a pivot, I think it's not likely because the Fed is very determined to tackle or to bring down the inflation. And then let's look at a target of the Fed. Yeah. So actually, the chair of Federal Reserve, Powell, has made it very clear that we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. And then what it means is that Jay Powell is actually determined to bring down inflation by raising rates and therefore sacrificing financial earnings and also equity growth. All of these will be sacrifices for bringing down the inflation rate, and that will be done hopefully next year. By the end of next year, we'll see that the interest rate will maintain at 4.5% or 4.6% next year. And then probably, well, let's hope they will have a pivot, and then they will cut the interest rate, and then they will have some they will stimulate the economy again, and then hopefully we'll see stocks and equities rally next year, a Fed pivot. Yeah, that's what we are hoping for. And yeah, so if Fed is planning to raise interest rate ahead according to schedule, till early first quarter of 2023, and then we're expecting DXY to just keep pumping. So if we refer to this chart, just refer to this chart, right? It's reasonable to think that, okay, so if Fed is going to raise interest rate, what will happen? DXY will keep pumping, ripping higher and higher and making higher high and higher high until it cuts down the inflation, cuts down the interest rate. Okay, so basically the reason behind is, if they raise interest rate, they will raise interest rate on reserve balances, and they will also raise the award rate of reverse to purchase agreements, and that will attract a lot of global money into US dollar because they want their money to be parked with the Fed, or they can buy US bonds, something like that. And that is going to send DXY even higher. So other central banks are probably going to, raise their interest rate as well. They want to they don't want to be left behind. They don't want their currencies being devalued in relative terms to a very great extent, and that's not good for the economy as well. Okay. So some global news that we have to just pay attention to, because these things are actually probably raise interest rates, and then that will damage the economy or damage financial activities or investments in the eurozone. And also, Russia has already significantly reduced gas exports via the pipeline, and these are some macro news that we have to pay attention to, because it's actually it has a significance there. It actually sends the energy prices of euro higher, and therefore we're expecting the central banks reacting by raising interest rate, and therefore just discouraging investments, and then people would prefer less risky assets, and therefore Bitcoin and also equity markets are going to be hit. So, for example, another news that, for example, Russia and Ukraine war tension worsening, the mobilization of Putin, the president of Russia. This news actually has a negative effect on equity market, and also, I will say, to risky assets. Bitcoin is one of them, and therefore we have to pay attention to how this thing goes. If these things go worse, and then it's reasonable to think that people would prefer less risky assets, right? And therefore, maybe we'll reduce our risk exposure. We have to hedge our portfolio, and these are the things that we have to position ourselves, right? So we are not at the candy drop yet, because I'm still, I still have something to, just to talk with you guys. So let me just check the comment section to see if you guys have some questions. All right, cool. Wait a minute. So let's look at ultrasound money, right? And ultrasound money, you can just Google it, and then you can check the stacks of Ethereum. Since it's merged, you have the supply, and also you have the supply growth stacks, and also gas fees, base fees, Ethereum supply, supply projection. These stacks, they are very you can refer to this when you are tracking the performance of Ethereum. For example, a lot of people are thinking that oh, Ethereum is going to be deflationary upon merge, and the fact that it has not, we have not seen a deflationary situation for ETH since merge. We have additional 8,000 ETH being issued, and that's a lot less than the proof of work chain, right? The proof of work chain a lot less, but you can deem it as we discussed in the earlier episodes, you can deem it as deflationary in relative terms to the Ethereum proof of work chain. So we are still seeing an additional supply of ETH since the merge, and it has not gone deflationary yet. Just an update for you guys. Yeah. So feel free to check out this ultrasound money. Yeah, it has the burn rate and also burn total for 1 day. Yeah, some stacks you can refer to. So I want to share with you two more news, right? The first another one I want to show you is that CBDC. Yeah, CBDC. CBDC is actually central bank digital currencies. So why I want to talk about CBDC is because Powell, we know that Russia has been very proactive in doing CBDC because of US sanctions, and they want to settle international trades in a CBDC. And also, CBDC is also very is being promoted in China as well, and also in Hong Kong as well. We have a legislation proposing the adoption of CBDC, and our people are worrying that CBDC is actually not a good thing for everyone, because they think that CBDC is a dictatorial or authoritarian currency, and that's not good because it's not decentralized. It's still being controlled by government. It opposes to the Bitcoin's concept. And for example, Dan held a famous Twitter, or I would say Bitcoin maximist, since he promotes Bitcoin a lot, and he says CBDC is a threat to human freedom because maybe he likes the concept of Bitcoin being decentralized, and he loves this product, decentralization of Bitcoin, and therefore he opposes to CBDC, and he thinks that CBDC is comes with a lot of sacrifices. For example, we have a lot of just civilians and that thing, and also in the U.S., President Joe Biden's signaled the U.S. is considering following suit after directing its Office of Science and Technology Policy to submit a report analyzing 18 CBDC systems. So are we going to see CBDC taking over stablecoin and crypto? We don't know, right? But definitely CBDC is something that we have to watch out for, because if you have CBDC, and then probably stablecoins and crypto will have a less just significance in the market, because people will all use the stablecoin. I mean CBDC, but not stablecoin for their daily transaction, because it's being imposed by the government. It's being adopted by the government, and people have followed that. So yeah, definitely, I think that we should pay attention to. And also another thing about DeFi, yeah, because it comes to my attention that Fed Powell, the president of Fed, Jay Powell, he says DeFi needs appropriate regulation before expanding to retail. We had a very, very nice development of DeFi back in 2021, and we called it DeFi summer. But the Fed seems like Powell doesn't like that. He says very significant structural issues around the lack of transparency in the DeFi ecosystem. What it means is that we are seeing a lot of scams. We're seeing no transparency there. And then he might think that he has to get some regulation, also legislation there, and to regulate the development of DeFi, to protect people in the borrowing and lending activities, for example, in Aave, also Curve, because DeFi is actually decentralized finance, and what it means is it enables a high degree of convenience in financial activities, including staking, borrowing and lending, and also revolving loan, taking out loan against any other cryptocurrency, crypto assets by staking your collateral there. Yeah. And Powell also says we need to be very careful about how crypto activities are taken within the regulatory perimeter. Wherever they take place, blah, 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 there is a real need for more appropriate regulation. So the stance of Federal Reserve is actually very clear, because what Powell said is that more regulation is needed to protect people from retail customers from, just getting along with DeFi. So probably it actually, I think it correlates to the development of CBDC, right? Because the government wants more control over these decentralized activities, and therefore they would like to have CBDC being incorporated, and also more regulations on DeFi. And now, Ethereum has become I would say a utility in the US government, because they has all these regulations and legislation to control the validators of Ethereum, for example, Lido, and also Coinbase. Coinbase is actually under SEC, and Coinbase is actually being regulated by SEC, and therefore SEC has the power to control Coinbase validators. We mentioned in the last episode that Coinbase and Lido, they have a total of 40-something% of all of the validators, 40-something% of validators in the Ethereum proof of stake chain. And then if you have that great number of validators, and it's actually easy for you to manipulate the chain, especially if you have 51%, more than 50% of the validators, and then you can actually decide what activities that it could take place, or what or banning any transaction that you like is achievable. So let's look at DeFi Llama. Yeah, let's look at how DeFi is going right now. So total locked value is now standing at 53.81 billion. And then in 2021, we had a peak of around 180 something. And then that's less than one third of the total lock value at the time. But in my opinion, the total lock value at the time is actually speculated, because some people could take a loan and then they could stake it in this, and then they can borrow money and do the staking, and they lock their asset in there, and therefore and also if the price of Ethereum is being speculated, and then the total lock value will also increase, and therefore speculation is being it's being considered in the total lock value. So right now we are standing at 53 billion. Okay, and then we have to look at other DeFi. For example, MakerDAO, we still have 7 billion, right? 7.19 billion. And as for Curve, we have 5.19 billion, 5.91 billion. And for Lido, we have 5.82 billion. And for Aave, we have 5.57 billion. As for Uniswap, we have 5.16 billion. So these DeFi are actually doing very well. In 2021, we know the DeFi summer, and now it's cooling off a bit, right? It's cooling off a bit. And then probably less activities there, as the market is bearish, and people are not willing to, just speculate or have a lot of transactions. And Fed Chair Powell sees real need for more appropriate DeFi regulation, citing very significant structural issues. So the stance, I would say, is very solid, that the US government is going to have more regulation on crypto. Hopefully that's a good thing, right? And then as World Cup is coming closer, and then it comes to my attention that Mojo has a platform that allows you to bet on different players, right? I'm not a football guy, but I think it's really interesting. It's like something like Creator Coins, and you can long and short on different players depending on their performance. Right? I think it's really interesting. I'm going to deep down a little bit on this thing, and I'm going to share what I find out next week with you guys, next episode with you guys. But I just get to know this. This is a speculation platform on different sports players. Interesting thing is something like create a coin, but you can short it. So when a performance of certain play is not good, you can short, and if it's doing good, and then you can long. Very interesting, right? Let me find out more interesting thing and then share with you guys later on. Yeah. So um that's basically a lot of things that we covered, and basically that's what I want to talk about with you guys. And then let me check if you have any questions down there. If not, we'll have the kind of job section. Yeah. So make sure you have your Huobi app opened, and then you have to trade to earn crystals, and then you have to spend 30 crystals to join the Candy Drop event. So the Candy Drop tokens will be randomly distributed to registered participants, and they will be delivered within 12 hours. 5 lucky stars will be awarded with a special airdrop worth of 100 USDT. Lucky star will be notified via SMS. So make sure you guys just just take some trades on the sport and Huobi app, and then yeah, hopefully you'll win the lucky star, and also you'll get some Candy Drop tokens. Yeah. So that's the end of today, and thank you for listening. Yeah, thank you for listening always. And then hopefully next week I will update market again with you guys, and then let's see how the greedy goes next week to forecast if Bitcoin is going to pump or dump. But at the moment, I think since the reverse repo is increasing, I think the probability of seeing downsides of Bitcoin is high. But it doesn't mean that Bitcoin cannot pump, right? Because who knows, right? And next episode, I will also just bring out more things about that Mojo, the creative coin that you can long and short at the same time. That's interesting, and I will talk about it next week. Thank you guys for listening. Yeah, see you. Peace. Hopefully you get the tokens, right?